Welcome back. We're discussing today wealth in Asia and the business of private banking in an industry that is changing rapidly. How are the alternatives shaping up to challenge the private banks in the region? Still with me, Jan Bellens, who's a global emerging markets leader at Ernst & Young, EY, and also joining us on this half of the program, Tanmai Sharma, founder and chief executive of Mesitis Capital, a startup fund management and investment platform here in Singapore. Tanmai, you heard the first half of the show. Now, you're someone who went from the old school industry to the other side, because you don't think that everything that we talked about in the first half is necessarily addressing the issue. How do you see the problems from where you sit now?
I see a few very deep fundamental problems. The main problem that I see is a conflict of interest between the advisor and the client. The advisors in what is an open architecture model get paid typically they keep one-third of whatever commissions they earn on the client. And they need to make a monthly or a quarterly target on the client. So the system essentially rewards a short-term approach, churn the account approach. And it's a vicious cycle. And what is happening is that over a period of time, the client has become savvy. And he understands that there is a conflict of interest with the advisor. And therefore, people have sort of got disenchanted with their advisors and moved away for other channels. So that's one problem. So
the structure leads to the relationship manager and the experts we spoke of earlier on looking to consistently move money around in order to gain commissions on it, which not only is bad financial advice, but it also adds to the cost structure.
It does. And the very interesting part is that the same banks, so the same banks you mentioned that are big players in the private banking industry, operate extremely differently in the institutional segment. So the way the institutional segment works is they figured out long ago that the flow product is going to become commoditized. So the flow product has become electronic, there is direct market access, and the client literally clicks a button and does the trade. And the advisor or the account manager comes in on the big ticket stuff or the complicated stuff. So they know, I mean, the Ferrari actually exists. It just exists on the institutional side. On the private banking side, the approach is very different. Same bank, same DNA effectively, but there the approach is very short term. I can give you examples where an M&A banking house would give an account manager 3 years, 4 years to develop relationship with a client before they take him to the IPO and actually make money on it. So on the institutional side, banks have a much longer term horizon and a much more rational horizon, and in fact a very technology driven process. But on the private banking side, it's literally the jungle out there. So go out and kill.
Your response to this has been what?
My response is that
in terms of providing a different kind of service.
Yes. So what we do is we've just tried to take out the conflict of interest from the equation and try to make it easier by bringing technology in. So what we are doing is not really rocket science. What we are doing happens every single day on the institutional side. It's just not available to the private banking client. The interesting thing is that the private banking clients right now give you volumes which are comparable in size to institutional guys. So all we're doing is a very, very simple first generation institutional product to the private banking client. We have essentially split the execution from the custody. The client wants bank custody, that's clear. And in fact, clients diversify banks. So a typical client will have a minimum 3 banks. So there'll be 1 European, 1 Asian and 1 American. And when you said that Asian banks are only 10% of the net worth, there is a cap. They will never be more than 33% because the client is so risk averse that he will diversify regions. So that's what the client does. So we never touch or handle client money. What we do is we just give them efficient execution. We buy their securities or bonds at the best price and deliver it into their bank account. It's a very, very simple idea. It's just that nobody does it.
Jan, your study has been on the banking industry itself and talking about the same issues in a certain extent, but your conclusion has been this is an expensive process, going digital, managing those resources. I think your report says 1 to 3% of revenues needs to be spent in order to bring the industry into workable form for the 21st century, and yet there are some people who are doing this with small offices in back rooms in Singapore.
Yes.
I mean, how do you critique with the model that Tanmai has brought up?
I think, and again, I think I'm glad there's these innovations that are coming to the fore. At the same time, I think the incumbent banks will invest, those big amounts in transforming their model. The challenge with the large banks is that they are working on legacy systems. Some of the innovators can come in with new systems, new technologies, which are cheaper and more versatile.
But given that fact, though, I mean, this is what we've seen throughout every industry where digital disruption is coming in. Is the legacy industries are so slow and so hidebound that it's the small guys that profit. I mean, do you see this as being a genuine threat to the industry as a whole?
I think there the banks will still have the advantage from the trust and from the brand and the reputation that they have built over the years. So I think this will take time, and the question is, will the banks be quick enough to transform themselves? Yeah. To be
let me give you a live example. I have a customer, and like most of my customers, has 3 bank accounts: one Asian, one European, and one American. He's retired, and he calculated that his cost of living in Singapore is high, and he needs to make just 5%, minimum 5% on his portfolio to justify staying in Singapore. He gets bank statements from these 3 banks. So he gets a statement from the Asian bank, he gets a statement from the European bank, and he gets a statement from the American bank. That statement is page after page after page of transactions, but it doesn't tell him how much money he made. It doesn't tell him what his cost of borrowing was. It doesn't tell him when he bought a bond or sold a bond, what happened to it. So he came to me and said, I need to figure out if I'm making 5%, because if I'm not, then I'll relocate. I'll relocate to a cheaper place, I'll move my kids out of school and do all that. Can you please tell me how much money I'm making? And we took these bank statements, and we have figured out electronic ways of processing it. So when he sent me the bank statements, which was Jan to September this year, it was 450 pages. 450 pages of literally data. And we were able to extract from that what transactions he did and how much money he made, and draw his NAV and draw his chart. And now the customer can, and it turns out that he was making more than 5%, so he's very happy. But the point I'm trying to make is that when we started this company, when I started Mesitis, I thought I will teach my customers how to play a better game. I'm figuring out that the system is even more messed up than I thought. Customer right now doesn't even know the score. In fact, he doesn't know whether he's playing left to right or right to left.
So basically what you're saying is, as I say, the same old story of digital disruption. You're Absolutely. Applying technology in areas where people have Absolutely. Not really done it in a proactive way Absolutely. Before. But what about Jan's point that really the private banks have got a legacy and a brand image and a status that is hard to beat?
You're right. And you'll see our basic business model. We do not handle or touch client money. Client money stays in the client's own bank account. I sincerely believe the best place to park your assets and your cash is a bank. And we never change that. So all we are trying to do is, but the best place to buy your assets or do transactions is not necessarily the bank, because their cost of processing is very high, it's very manual, the systems don't actually cope up. So it's literally dividing your process into pieces and going with the best of breed for every place. So the best place to store your assets is a bank. Absolutely, that's where it should be. Best place to trade is somewhere where it happens electronically, where the price discovery is there and you don't get ripped off. So we are doing that. We are providing the electronic connection to do a trade. And before you start trading, you need to know what the score is, and we are helping you find out what the score is.
So the consolidation in the industry, you've already said that it's going to be with more consolidation into fewer numbers of players. The players in Asia, very hard to find. I mean, DBS, Bank of Singapore, HSBC doing some stuff. But how do you think the market's going to break down here vis-a-vis not just the incumbents, but also the up-and-comers?
I think, well, 2 points. I think, first of all, there's a lot of room to grow. Although this is already, a very wealthy market, a very limited percentage of assets of these wealthy individuals is actually with the private banks. Here in Asia, it's between 10 and 20%. In Europe and the US, it's 70 to 80%. So there's not just the growth of wealth in the region, there's also people putting their money and handing it over to a private bank. I think the second one, and I fully agree with Tanmai on this, I think there's a lot of change to happen. I think technology will be a key driver. I think the Asian banks, because they don't have that old legacy, or at least younger in terms of legacy, have a great opportunity to capture some of that wealth.
This is very interesting. So I sincerely believe that the customer is not stupid. customer gets the joke about the conflict of interest. So what has happened as a result is, right now the customer does not have a choice. You have to keep your money with the bank. And yes, the bank is expensive, so a customer keeps switching banks. They treat their account managers very badly. In fact, I know a couple of account managers who drop their clients' kids to school, so it's that bad. I really feel sorry for them. But so that's what's happening. But if there was one of the existing players or a new player who came in with a highly digitized offering, which is exactly what they're doing in the US. So it's not rocket science. If you came in with a highly digitized offering, there are takers out there. And it's very interesting. So if you look at the pyramid of the wealthy people on a worldwide basis, the people who are worth more than 30 million even now get treated extremely well by the private banks. But there are only 125,000 of them worldwide, maybe about 15,000 of them in Asia. But the people at the bottom of the pyramid, people who are just between 1 and 5 million, they are about 12 million of them worldwide. They get treated very badly by the private banks. They sort of fall between the cracks. And that's the market to go after. You cannot do it without a technological solution. And that's where the big money is.
There we're going to have to leave it, gentlemen. Thanks very much indeed, Jan Bellens
and
Tanmai Sharma. And that's it for our program tonight. On Thursday, on Between the Lines, Russia has stepped up its rapprochement with Pakistan just as India gets closer to the United States. Is this new defense pact scripting a new history for the region? Join us for that conversation on Thursday on Between the Lines. A final reminder, you can watch other shows online, channelnewsasia.com/video. Goodbye for now.